Hi, December 2, 2014. My name is Fausto de Arruda Botelho. I'm a technical analyst and I'm going to be talking to you about some very important indications that technical analysis is giving us for the commodity gold traded in New York. We are indeed having a very important indication in these 30 years of history chart of gold starting in 1984, where we can see the upward trend that started in 2001. And if we understand this upward trend as a impulsive wave composed, as Ralph Nelson Elliott stated in 1930s, composed by 5 waves, wave 1, 2, 3, 4, 5. Then we can imagine that we're going to have a 3-wave process on the correction that is already started. So we understand that the correction started actually in the stop of 2011. Indeed, when we see far away, as we're looking now at the forest, and we understand that this support line was in fact telling us what was the bearing that the people responsible, for the mass of people responsible for this upward trend, was respecting. Actually, support line is just, something that the individuals responsible for the upward trend are respecting whenever the corrections of the upward trend are made. So when we look at the chart, we can easily see that there has been an inflection point here in 2011. And whenever that happens, we can use the Fibonacci levels in order to preview until when is going to go the correction, until what level the correction is going to go. And we empirically know that whenever we have a kind of action like this, the reaction bears proportions with the Fibonacci levels, and these proportions begin with 0.382, which is equivalent of a correction of 38%. We're talking in exponential terms. So what we can expect for gold is that it drops at least to this line below $900 an ounce in the long run. But in the medium term, what we see clearly is that this accumulation, it's a continuation accumulation that is called by us technical analysts as a downward triangle. And this downward triangle in fact contains something that explains very much what technical analysis is about. We technical analysts look at this kind of accumulation and we see here a battle that is being held by sellers, which are represented by the bear, and buyers, which are represented by the bull. So this is a bull-bear fight or battle between the war that always happens in the market. And in these battles specifically, we can see that the bears are becoming far more aggressive at each stop. They started to sell here around 1430, and then the bears sell in the stop of March of this year, 2014. They sold at I said 1480 or 1400, 1380 actually. They started selling at the beginning at 1440, and then 1380, and then 1340, and finally in October last the bears enter selling at 1260. And finally, in the last trade day of October, they broke the support line. Well, at the same time that we can see that the bears are getting more aggressive, the bulls are buying at the same level, always at the same level, and this was 1200 level that, as I said, was broken in the last section of October. Well, afterwards we can expect what we call a pullback, and that's exactly what happened. And I have to say that when a support level is broken, it inverts its polarity, as we say, and instead of offering support, it starts offering resistance, and that's exactly what we see here. This pullback culminated with a accumulation that we call a drift pattern. A drift shows the weakness of the buyers here. Instead of going straight up, they start sliding towards the previous movement, and that indicates a reversal of this previous movement. So that is why we think we're just seeing a pullback for the 1200 level, and we expect gold prices to fall now, fulfilling the triangle objective. Whenever we have this downward triangle, we can preview until when it is going to go, or we can forecast an objective, and for that we take the high of the triangle and project from its vertex downwards, and that comes to 1000. So that's where we think the market is going to go in the mid-term, and then below 900 in the long term. So thank you for watching the video. If you like the analysis, visit our site at marketposters.com. We sell posters of the Dow Jones and Bovespa index there. Thank you very much. Till